But let's get in. Market expert Aditya Shah is joining us, founder of Hercules Advisors. Always good to chat with you, Aditya. Tell us about this entire 4 series on the trot that we've seen ourselves on a winning streak. Now that streak has ended. The Nifty has fallen more than 300 points, Aditya, and that's a decline of about 2%. What are the factors that are pulling the index down after all this volatility and this kind of range-bound action that we've seen?
Good evening. So we've seen that the Nifty has been consistently rising from the March or the April series, and short-term corrections cannot be ruled out. We've seen a huge euphoria that is playing out in the small and the mid caps. So a little bit of correction will help check the rampant, exuberant speculation in the markets. And I don't see any reason per se. Of course, things in the US are getting difficult, and the US Fed will continue to keep hiking interest rate. And in India as well, we've seen the prices of tomato rise. So the inflation cycle would mean that the RBI would not stop, will not start decreasing the interest rate. So all in all, these are short-term phenomena that will ease away in the next 2 to 3 months. I don't believe that the Nifty will continue its correction course. It will stabilize from here on, and we will see an upward trajectory in the coming 6 to 12 months.
As an extension of that optimism, it's important to remember that the Nifty did not actually breach 19,200 on the downside. But, you know, Aditya, in any case, what does this price and this momentum that the markets find themselves in indicate to you at the moment? Do you think this kind of weakness that we are seeing right now is going to last only for 2 to 3 months? Because like you said, a lot depends on how the Fed moves.
Correct. So 19,200 seems to be a support for the market, which the market does not seem to break. Point number 1. Point number 2 is market will keenly now watch what the US Fed does, and at the same time what inflation numbers come out in India. The tomato prices have gone down, but the onion inflation is coming up now. So that's the second point. Of course, the government has gone ahead and cut prices of cylinder. So we need to clearly see how the inflation moves. The third point is now slowly and steadily the market will also start to price in what will happen in the 2024 elections, and that will now drive the market sentiment. Per se, I don't believe that these are all long-term phenomena. Market will continue to keep moving up slowly and steadily. The economy is doing pretty well. The credit growth is very good, and the capex cycle is reviving up. So there's nothing to worry about. Short-term movements ups and down continue to keep moving on.
In that case, among the sectors, Aditya, we've seen oil and gas, power, FMCG and banks. They're down anywhere between 0.5% and 1.3%. I was looking at the data. And on the other hand, you have realty stocks and metal stocks, capital goods, besides IT. All of these have gained, and they've gained anywhere between 0.1% to 0.7%. So how do you think the sectoral performance is likely to change in the September series, considering all the cues that are coming up?
So you need to focus on the domestic facing economy stocks. You need to focus on the financials. You need to focus on the FMCG stocks, the chemical stocks. The pharma stocks have done pretty well over the last 4 or 5 months. So in my opinion, domestic facing economy stocks, in my opinion, IT will continue to keep struggling. The metals will continue to keep struggling as we see weakness across the globe, and especially in US and Europe. So domestic facing economy stocks per se, financials, chemicals, pharma and FMCG will continue to keep doing well.
And how much of an effect do you see a deficit monsoon play out in the markets? There is a big deficit in August. It's been the driest August in recent history. And that is clearly dampening investor sentiment to an extent, isn't it?
Definitely. So a dampening monsoon could hit the inflation numbers, and the inflation could start to move up. And the RBI is keenly watching what is going to happen. But per se, I don't believe that will be a persistent problem. That could be a problem in the short term for 2 to 3 months, which could ideally mean that the RBI will not start decreasing rates at least until the second half of next year. So that is the persistent problem, but that's a short-term problem per se.
What about the traction in the broader markets? Do you see it carry on, or is there a correction on the cards now after the strong run-up we've seen, especially in the mid-caps?
That's where the pain point is. So small and mid caps have risen up sharply over the last 3 to 4 months, whereas the large caps have not risen that much. So there could be a possibility that the small and the mid caps undergo a certain bit of correction, where the large caps catch up. Don't buy large caps or small caps, or don't buy mid caps or small caps at any valuation. Be cognizant of the valuation. Be cognizant of the quality of the company. Stick to high quality companies. And on the large cap side of it, if the valuations are good enough, go ahead and buy them.
For the August series, the Bank Nifty is down more than 1,400 points, Aditya. Do you see further consolidation on the Bank Nifty?
Bank Nifty is consolidating mainly because of HDFC Bank. HDFC Bank has been underperforming and could underperform over a period of next 6 to 12 months. However, all other banks are continuing to perform well. There's no problem per se. And after the consolidation, we could see banks continue to lead the market higher at least for the next 12-24 months.
Aditya, thanks very much for joining us with your views here on this edition of India Tonight. Thanks indeed.